So to start it off, right, one of the points that Manway mentioned in his presentation earlier is the global shift in the reporting and compliance requirements. And the most recent update in this one is the ESG in the ESG reporting requirement space is the launch of the ISSB standards. So just a brief look back on the ISSB, or the International Sustainability Standards Board. It was formed in November of 2021 from the COP26, or the Climate Change Summit, with the following objectives, as you can see on the screen. So the first one is really to develop a global baseline for sustainability disclosures, which is standardized for both companies and investors use. And then the goal is any jurisdictional requirements can be based on these baseline standards. The next one is that the ISSB standards has been, and the ISSB itself has been designed so that there could be a provider of reliable information to investors by helping companies be able to communicate how they identify and manage sustainability related risks, may it be in the short, medium, or long term. And lastly, the goal also is to facilitate the interoperability with disclosures that are either jurisdiction specific or are targeted at more than one stakeholder group. So in June of this year, going back, the ISSB has launched the inaugural standards. So this establishes a new global baseline for the sustainability reporting. So what are these standards? So the ISSB reporting standards are referred to as IFRS S1 and S2. So to briefly explain, there are two components, right? So the first one, the S1, it sets out the conceptual foundation, the general requirements, the core content of the report. So it's generally structured after the TCFD recommendation and should be applied to each of the company's identified risks and opportunities. In addition to this, the S1 also requires for the companies to make an explicit statement on whether it's aligning to ISSB standards or not. So, similar to the other standards where you have to make a statement whether you are reporting reference in accordance to the standards. Companies are also required for under the IS1 standards to supplement their data with comparative information, as well as the current and anticipated financial effects. Which leads me to the S2 portion. So the IFRS S2 is designed to disclose really more detailed disclosure for the company's climate related risks and opportunities. So similar to TCFD, but it requires more details. So just to clarify, right, when we talk about climate related risks, it refers to the negative effects of climate change that has, or the impacts that it has on the company, which includes any potential physical transition risks and so on. The climate related opportunities, on the other hand, they refer to potential effects of any efforts that the company will put in addressing the climate related risks. So whilst combating the climate related risks or impacts on the company, it will also require, companies are also required to assess what are the opportunities for the company, right? What can they gain from identifying those and combating or trying to address those risks. A couple of questions would be asked: who's required to report? What's next, right? So in the next slide, some information would I'll provide some information in that. So note then, at its release, the inaugural standards, the IFRS S1 and S2 are currently to be reported voluntarily. So unless various jurisdictions already say, okay, you have to adhere to ISSB standards in your reporting, at the moment it's all voluntarily, which applies to both publicly listed and privately owned companies. So of course, that's the okay, who is it applicable to, right? The next question is, of course, when and where to report. So these standards are effective. So the when portion, it is effective for reporting cycles beginning on or after January 1, 2024. So if your financial year starts on or after January 1st, 2024, then this will you are required to report according to ISSB by 2025. Again, should you want to adapt it earlier, or start with the ISSB reporting. So similar to other sustainability reports, right? Generally, the report should be published concurrently with the company's financial statements. And of course, since the this is a recent release or publication of the standards, right? Similar to other newly introduced reporting standards, companies who will choose to disclose and follow the IFRS S1 and 2 will of course be given some relief at the beginning. So at the first year of the disclosure, so they would be given some relief on the use of the emissions calculations. This is to um, facilitate seamless adoption for companies. So there, they can start off with disclosing the items in the reporting standards. So talking about seamless and the facilitation of the adoption, right? So the next question, right? So if I am to adapt to ISSB standards, how does this then address the entire alphabet soup in ESG reporting? So IFRS S1 and S2, or the ISSB standards, are built on the various existing frameworks. So they're not reinventing anything. So they're not starting from scratch, right? So these are all based and built on and based on and consolidated standards from TCFD, the SASB, or Sustainability Accounting Board Standards Board, the standards from SASB, the standards and framework from CDSB, or Climate Disclosure Standards Board, as well as the IR, Integrated Reporting Framework, and World Economic Forum. So the metrics from all of these standards are the basis or baseline for the ISSB requirements. So these is to enable streamlining of sustainability disclosures. This consolidation aims to help companies, right, benefit from the efforts that they've already put in reporting. Of course, we don't want all those reporting to go to waste. So what they've already made before can be their baseline or starting point to adapt to ISSB, while they're reducing the alphabet soup of sustainability disclosures. So this is, of course, in the long run, right? This would provide a way for global comparability for various financial markets and allow jurisdictions to develop additional requirements, if needed, to meet any public policy requirement or broader needs for each of those markets or jurisdiction. And then lastly, of course, you see the GRI, or Global Reporting Initiative standards here as well in the diagram, right? So the ISSB is also able to align the criteria with the GRI standards. So in result, or in effect, it alleviates the reporting workload for companies that plan to employ the ISSB standards and who are currently using the GRI standards in their reporting processes. So just to move on, right? The launch of these standards showed the continuous evolution and improvement, as Manuel mentioned, in terms of the trends, right? In terms of ESG reporting requirements. And just to summarize and provide some key developments, these are also shared by ISSB in their newsletters. So let us look at the next slide, please, for the key developments. So here's a summary of the recent updates. On the 26th of June this year, so as mentioned, the ISSB launched the inaugural standards. So this establishes a new global baseline for sustainability reporting and should be will start in terms of the reports that will come out beginning 2025. So for financial years January 1st, starting January 1st, 2024. And then the next key update as well is that the Financial Stability Board, or as you can see on the slide, the FSB, announced that in the culmination of the TCFD's work, so it has been completed with the release of the ISSB standards. So once the ISSB standards were released, it marks the culmination of the TCFD's work in terms of monitoring the progress of the company's climate-related disclosures. So it would now shift to ISSB beginning 2024. And then the third one in here is that this one is a significant milestone as well, because the International Organization of Securities Commissions, or IOSCO, formally endorsed the ISSB standard. So this is to provide investors with consistent, comparable, and reliable sustainability information. So this is significant because, number one, the IOSCO represents 130 member jurisdictions. So these are capital market authorities that regulate more than 95% of the world's securities markets. So this is significant, as this is the first time that the IOSCO has endorsed any sustainability reporting framework. And again, that is because the goal is to provide investors with this consistent and comparable information across. So, and this is also represents a significant mark in terms of the adoption, right, of sustainability reporting for each jurisdiction. And then lastly, I think Manwei also touched on this a bit earlier in terms of the European Commission issuing the ESRS, or European Sustainability Reporting Standards. So it comes into effect into 2024, the same time as ISSB. But the key thing here is that the European Commission, the EFRAG, and the ISSB has provided an update already last July 31 on their discussions. So there's a goal also, again, to keep up to the objective of the ISSB, right? The alignment and interoperability between the ESRS standards for EU or Europe and the ISSB standards. So the European Commission, the ISSB, has worked to improve this interoperability. And this aims to help reduce duplicative reporting for companies, especially those that are subject to multiple jurisdictional or regional requirements. So if you can just imagine, right, companies who are, say, listed in the ASEAN market, listed in the European market, will have to comply to various standards. But with this alignment, right, it ensures that there's a reduction in, the dual effort or duplicative effort in reporting. And speaking of jurisdictional requirements, to conclude my part of this webinar, let's take a look at the climate-related disclosure requirements specifically for the Singapore market. So in this slide, it summarizes the Singapore's roadmap for climate-related disclosures. So if we look at the first part, the Singapore's current requirements for climate related disclosure center around the requirements for SGX listed companies to report using the TCFD framework. And this applies to various companies in certain sectors. So there was a phased in approach, right, which is applied to certain sectors beginning 2023 and remained voluntary for private and non-listed companies at the moment. However, in July of this year, following the release of the ISSB standards, the Sustainability Reporting Advisory Committee of Singapore recommended mandatory reporting of climate-related disclosures following the ISSB standards beginning 2025 for all listed companies. And then this is also another milestone because previously non-listed or private companies are not required to disclose, right? But in these recommendations, so they're not yet in effect, they're up for feedback and consultation process. So the other recommendation is for non-listed companies or private companies to begin disclosing sustainability begin their sustainability reporting sustainability reporting process beginning 2027. And For starters, this applies to companies with at least 1 billion Singaporean dollars in revenue. So there are around, at the moment, 300 companies affected by this. So all these recommendations will be finalized by 2024. So, but what does it mean, right? So, just to conclude, the ISSB standards, which represent a significant stride in enhancing the oversight of ESG impact on companies, industries, and economies, and as well as standardizing, creating that global baseline for reporting, right? So, as a result of this one, we anticipate the global uniformity in terms of being able to report on the same metrics, eventually compare ESG data more easily across jurisdictions. And this also has a potential uh, to provide businesses with a stronger, right, and more practical insights in climate change, as well as in promoting sustainable progress. So the next, of course, the next challenge is how to navigate through these disclosure requirements. It's the next step for companies, and it's something to gear up for, especially for those who are yet to start with their reporting. I think this applies mostly also for private and non-listed companies, but also at the same time for those listed companies who have, who already started but are only reporting at the minimum or compliance purposes at the moment. So something to gear up for, and this is exactly what we want to share in this webinar. So hope that provided some insights on the ISSB standards that's recently released. I would like to thank everyone for your time today, and I hand it over back to Aloysius.